Thank you for joining us today for our webinar, From Stress to Success, Tackling Financial Anxiety with Confidence. My name is Kelly Blount, and I will be today's moderator. We have a great agenda planned for you today on understanding what financial anxiety can look like and tips to create more control over your finances. With that, let's go ahead and get started. I'd like to turn things over to Todd Moore, Director of Education with Trinity Debt Management, to introduce himself and take us through today's topic.
Well, thank you so much, Kelly, and thank you for everyone joining us this afternoon. I think we have a very timely topic before us today, financial anxiety. I'm with Trinity Debt Management. It's always great to work with the credit union and great to be back. Financial anxiety. So as we think about some of the most of us are just kind of tuned in to where we're at right now with all the different financial changes that are taking place. I know that whether it's a student loan issue, whether it's being overextended on your credit, all these sorts of things, many of us now are feeling, and I think families are feeling the stress financially, just trying to figure out where are we heading. And here we are kind of heading, we're beyond the midpoint in the year. I know that there's been a lot of discussion about tariffs and changes to student loans and all sorts of things. So we know the current economic context. We know that things can be tough sometimes. And today, what I'd like to do is just walk us through some ways to address some of those underlying stressors, some of those underlying issues that may be causing financial anxiety. What I have planned for us today is we're going to be looking across the whole range of strategies to try to help us kind of get through this period and also maybe think about longer term planning so that if we have economic challenges that come our way, that we'll be better prepared in the future. So that's kind of where we're going this afternoon. So, there's a lot of research that talks about financial anxiety and just make some distinction here. And for our purposes, there's a lot of between these two terms, whether it's financial stress or financial anxiety. I'll differentiate a little bit between those, but for our purposes today, we know that financial anxiety it's an interrelated issue. So financial stress, we think about financial stress. This is a reaction. It's generally described as triggered by an external event, job loss, or an unexpected bill. That's a shorter term issue financially that we have to solve. When we think about financial anxiety, this we tend to think is a more severe, and it can also, the difference here is sometimes cause an emotional reaction, very different than, well, job loss in itself would certainly cause an emotional reaction. But in this case, what we're talking about is this underlying feeling, this state of anxiety that comes about, or an unease about finances that's persistent. It's a longer term issue. And there, what we're trying to do is think about behavior itself. What can we change financially that will shift us from having those longer term kind of feelings of anxiety? It can be a very difficult and stressful period to go through when anxiety kicks in. So just want to differentiate between those two terms. And for our purposes, again, when we say anxiety, we understand that, there's a lot of interdependence between those concepts. So now, when we think about some of the challenges that we have, there's lots of research out here, whether you're looking in the retirement literature or you're looking at personal savings goals, the ability to meet some type of short-term cash need. And a lot of times you'll read and hear about just a savings goal of saying, if today I had to meet $1,000 obligation with cash, could I do that? We continue post-COVID and job losses and some other things, despite the economy, making some progress, cash needs continue to be an issue. So if you're on the call today and you're thinking about ways to rebuild savings, if you're thinking about other ways to just improve financially, thank you so much for joining us, because that's where we're going to be heading. Some of these indicators of financial anxiety, if you find yourself in this state where, again, I'm thinking about how this, as opposed to just, having a short-term obligation, but this feeling, this persistent feeling that, things need to change, and you start to overthink decisions, you're spending, a great deal of time debating about purchases, or maybe you find that you start ignoring certain statements. This is something about behavior as well that sometimes in the financial behavior literature, you'll hear about ostriching or the ostrich effect. Avoiding certain types of things, kind of what they say, putting your head in the sand to avoid not tackling that particular issue that's causing anxiety. Those types of behaviors we really want to address them head on. Impulsive spending sometimes to cope with stress. Overspending on items can be a very big indicator of financial anxiety. Shame or guilt about money issues. I hear this, through my work at Trinity sometimes, where folks that I'm working with, guilt is something that they seriously carry. The concern, I've never done this before. I don't know why I'm in this situation, just feeling guilty about that. The context shifts things sometimes beyond our control. Our job is to respond to it in a way that addresses, again, this anxiety, underlying anxiety, and know how to cope with this through time, know how to have a financial plan that will certainly keep us afloat and keep us from having consistent long-term financial problems. But the last point here, one of those indicators, is strained relationships. And this is something that I certainly see in my work as well. If you, your spouse, your partner, you're not on the same page, money problems cause relationship problems. We certainly want to address that. Oftentimes, it can be one person either sometimes it's overspending, sometimes folks just have a problem even working through a basic budget together. So we really want to use this time now, if you're on the call and this is an issue, make certain that we can have that kind of conversation, get on the same page, start working together and clear this anxiety and actually create a workable plan. So I've talked about a little of these underlying problems, but again, broadly in our, what causes financial anxiety, all these sorts of things here, we're all in different places. So for today's purposes, what I'd like to do is kind of create a framework so that, if you're struggling with debt, or if it's student loans, or we think about past money situations, that is, maybe we've got collection accounts, or maybe we've overdrafted our accounts consistently, or it could be any number of these issues that you see listed. We're gonna create a strategy to kind of move us through this process. So first thing, when we think about financial anxiety, like I said, the first thing that we really want to do is we want to tackle this head on. Okay, we really want to be honest with ourselves about why we're in this situation, or just what is the underlying issue that we have to deal with. So I'm going to ask first that you gather the sources of anxiety. What is it that's really creating that underlying tension? Why do you feel the way you do? We want to write those things down, and we want to gather the numbers. That is, we want to really get a good financial understanding of what our bottom line truly is. So if you're struggling with certain debts, or it's a student loan issue, or the car's breaking down and we're going to need a loan soon and our credit capacity is just not where it needs to be, we want to write these sorts of things down so that we have a clear understanding of what those underlying issues are. At least, these are the things that I need to prioritize. Where should we go from here? And then we also, the better that we can get some of our numbers together, the better it is to put together our plan. Then we know we know where to prioritize our funds and how much we're actually going to need to get this job done. I'm going to be thinking from the very beginning about challenging you to really think about a financial plan. So this is that broad document that we're going to think about, so that if periodic challenges come our way, we've kind of got a broad plan in place that can really address some of these issues. We're going to reflect on that as we move through the next few slides. It's important when we set financial goals that these goals are realistic. We hear about this all the time, but you'll see what I mean here in the next couple slides. If you have a debt problem, it's not realistic to say I want to be an investor at this point. And I hear that. That may sound odd, but I hear that. And that's where, just having a financial plan that's set where we're addressing broadly our financial needs, it kind of helps us prioritize where we're at this point in time, and then where we're moving into the future. And then the last thing here is that we're going to continually, this is not something that we write down and we kind of move on to the next thing. We're going to revisit this, I think on a quarterly basis. We're thinking, every 3 months, at the most every 6 months. If you have a financial goal, we need to be engaged in this work. It's not something that we jot down and we move on to the next thing. This becomes a document that we continue to work through as we align, money towards down payments on, or to minimize or create down payments, whatever those financial goals may be. It's a workable document, and we're in tune with where we're at this point in time. So that's kind of the gist of what we're trying to do when we identify and create a financial plan. So first thing here, just big picture, before we get into some of the specifics of things that you might be able to work on yourself. Thinking about just broadly a financial plan, what I'd like you to do here, despite where you're at right now, to really kind of envision where you want to go into the future, okay? And there's a process to this. And if you need help with this, you could also reach out to the credit union. There's financial planners, advisors that are partners with the credit union that will set and work with you. If you're thinking, man, I just can't get out of the situation, I need some help, I want to accomplish these goals. And if you are struggling to put some of that together for yourself, having a conversation with the financial planner can be worthwhile. So I want to make certain that you're aware that those types of services are provided at the credit union. We have all sorts of different challenges when we think about financial plans. This is this life cycle approach. So if you look across age and where we're at different stages, whether it's we're in this process, we're a younger family trying to build some wealth. There, some of the challenges for you might be paying off, debt, better managing your student loan debts. You have a new family. What do I do with my insurance needs? I need to create some savings. All of these things can be prioritized, and there are products and tools that will help solve those problems. If you're also thinking, I've got young children, what am I going to do about college in the future? Where's the student loan program moving? What should I look at? And those are underlying sources of anxiety. Well, then, it would be wise for us to kind of work our way through those challenges. And that would be part of your list that you create for things that you want to prioritize in the next 3 to 6 months, really addressing those underlying issues that are creating anxiety, creating that tension. So these are all things that we can tackle. There are many good products and services that we can use through the credit union to really build wealth and to address that part of our financial planning journey. And then for others, there's the same tools apply, tools for investments and estate planning, those sorts of things, or just moving our way through this plan. If you have 529 plans for education, creating savings that we can use to pay down debts, those sorts of things. Maybe we're not investing at the level that we should. We're feeling that underlying tension that, hey, I've paid off a lot of debt. I haven't really invested the way that I would like. I'm approaching an age now. I'm kind of late 40s. I'm getting into my 50s. I really need to catch up. What should I do? These are all questions that we all struggle with. There's a remedy to these challenges. So work with us at the credit union, reach out, ask questions, and I'll also put a plug in for the webinar series. Part of tackling financial anxiety is becoming educated on these topics as well. And just if you haven't looked broadly at the credit union site for all the various seminars that are provided, there's some really great information. So I really want to encourage you, even beyond today's webinar, to go in and look at all the various items and topics that you can learn new things about financial education right from the GE Credit Union website. So think about that financial plan, where you're at here in the planning process, and just know that there are products, services, and strategies that we can put in place to solve those underlying issues that may be causing you financial anxiety. So for our purposes today as well, I want us to really think about a budget. We hear this all the time. Hey, we've got to create a budget. What's so important about a budget? So if we're looking to prioritize our income and really address underlying issues with financial anxiety, this is a pivotal, important document. You have to have it. I can't overstate it enough. You know, essentially, this is your crystal ball. This tells you where you're going to be moving into the future. So if you don't have a budget, I'm going to present a couple different budgets you can think about. But the first thing I want you to think about here, okay, is are you asking the right questions? And what I mean by that is, again, I use the example, you have some underlying anxiety about, you know, not having enough money for your children's education, or you have some anxiety about not planning enough for your retirement, but you're also carrying a lot of debt, or you've had some credit issues or some other lying problem. Here, what I'm saying is your budget should reflect your current challenge, okay? We can align some of those other goals, but we have to prioritize where we spend our money and how we address our underlying issues. Okay, so we really want to ask the right questions. You know, why are we doing this? How do I best align my income to solve those immediate needs that I have, those immediate problems that are in front of me? So that's, again, setting down and kind of thinking this through. The other thing is that we talk broadly about budgeting. I will tell you that you need to find a budget that you're comfortable with, that you want to stick with, that you're comfortable with. What works for someone else may not be the strategy for you. There's multiple ways to do this. Some folks don't want to work through an app. They don't want online tools. They don't want to deal with all that. They want pen and paper and something simple. The bottom line for us is that you got to find something that you're going to be committed. You're going to use that tool and be committed to working through that process. You have to stick with that for a while. It has to be a workable thing. I'm going to give you a couple strategies, but if you have challenges with that and you're struggling to find a budgeting approach that's going to work for you, you can always reach out to me at Trinity, and then I'll work my way through that process to kind of ask you some questions so I get a better feel of where you're at and what budget might work best with your financial behavior. So, but when you're thinking about budgeting, you really want to find an approach that you feel comfortable with, not just that someone's told you, hey, do this. If you're not going to stick with it, it's not going to have any value for you. And then the last thing here about budgeting is I'm going to challenge you to really start thinking about some type of savings goal. You know, if we can find at minimum, and I'm just using this for our illustration today, $50 to $100. I'm going to show you how important $50 to $100 can truly be in paying down outstanding debts. That's a pretty modest approach to having a savings goal. I'm just using it. Again, you know that I would love for you to have those numbers double or triple from what I'm saying now. But for illustration, I just want you to think about the power of $50 to $100. I'm going to show you how that looks in real time here in the next few slides. When you're working your way through a budget as well, you know, the next two slides that I'll show you have some various budgets that, again, you may find this a workable approach for you. But again, all the budgets start with this basic formula, income minus expenses. Okay, so you're going to jot down having a good understanding of all the fixed and variable expenses that you have is going to be key. That's where I say you got to gather the numbers. You know, you want to write this down, income minus expenses, work your way all the way through this process. Calculator.net is going to be a tool that you can use easily. You can go online. There's some really great budget calculators there. The website, G's money management tool is really a great resource for you as well. But at the end of the day, we really just want to work our way through this basic formula, which is really having a good understanding of what our overall expenses look like. What is our bottom line? Do we have anything to work with here? What changes can we make? When we're thinking about, you know, working our way through all of these various expenses, again, challenging to come up with some type of, if we do this work, can I find $50, $100, $500? What do I have to work with? You know, it's going to vary depending on the folks that are on the call. We're all in different situations, and we all have some source of financial anxiety. You know, I was joking earlier that my daughter just started college. Well, I certainly have some financial anxiety right now. So that's a different challenge for me personally. So what do we have left as we go through this process, looking at income and expenses? And the calculators, where those become powerful, is that allows us to quantify. We can actually use some numbers and make some real, we have something empirical, something of value to work with. So we're not just kind of guessing our way through the process. We can actually use these calculators to our advantage to make certain that we have real numbers and a real outcome. So I won't go in depth in all of these, but I'm going to show you the 50-30-20 and the automated approach. This approach here is going to think about folks who are on the call that just maybe are struggling setting anything up when it comes to budgeting. They're just they want kind of a loose method. I want to get started. I want to shift my financial behavior and just start down this path of really being dedicated to this process. This is talked about all the time, 50-30-20. 50% of your income is tied up in required expenses. So right off the top, we're looking to meet our overall expenses. 20%, what's unique about this approach, again, that savings goal, 20% of your income, you're going to try to set some type of savings goal. Here, you're saying 20%. It might be pretty broad challenge for some folks if you're carrying a lot of debt. But what this does is it tries to take your income and set 3 buckets of funds, 3 priorities: required expenses, a savings goal, and then it allows us to have discretionary spending. It's a pretty broad discretionary spending amount. So you can spend this money, that money is at your discretion. You want to go to dinner, you want to do other things with the kids, whatever it may be. You've got this 30% set aside that's kind of working your way through whatever those items may be. So 50% required, then the other part of your funds, if you can make this and structure this to work for you, savings and discretionary spending. This is really a budget that just tries to frame some percentages to take your income and get you to focus on priorities. That's really what this is intended to do. So if you're new to budgeting, you're challenged, maybe your spouse, your partner, however you guys work together as a family or as a couple, if you need some structure, this is a way to create some percentages around your income and your expenses. But it is a big picture, kind of loose approach. So if you need more detail, we want to go forward and maybe think about something like a money flow budget. So this is where we're comfortable with budgeting. Our income is consistent, but we're feeling kind of overextended. We're feeling tight on cash. We just want a better approach or a different approach, allow us to set some different priorities. You might want to think about the money flow approach. To make this work, you need to have consistent income. So we don't want seasonal income, or we don't want to have an income that's inconsistent. This has to be consistent in the sense that you're working and you have predictability in your paycheck, those sorts of things. But because we're going to be setting it, this budget, we say we set it and forget it. So we know our income, we know our expenses. We just want to tighten things up. We want to be able to set dates for payment. We want to create a savings goal. And then this pulls directly from your GE accounts and goes towards larger goals. So as a source of anxiety, you say, I really want to have better savings. Well, we're going to set it, we're going to forget it. You look at your income and your expenses. We build a budget that says, of my income per paycheck, $50 per paycheck goes into a dedicated savings account. And I'm going to plan that for the next, 3 months. $50 per check goes into, automatically is withdrawn and goes into this savings account that I've set up through the credit union. And then once I get that money, I'm going to take that bucket of funds that I've saved for 3 months, and I'm going to do some debt repayment with this. So it's not just minimal payments that we're trying to keep up with. We've saved for 3 months, and we're going to knock out a big chunk of debt. Okay, we're going to continue to do that on a 3, 6, 9, and 12-month basis. Well, here, what we've done is through this budget, we've structured that savings goal. We have a plan. Our plan calls for debt reduction. Setting it up this way, we create an automatic fund. It's withdrawn automatically. It's already set into our numbers. It's already part of our budget. At the end of that 3-month period, we know what we'll have. We have that bucket of funds to do all sorts of things. In this case, it's going to be debt reduction as a goal. But that's the basic idea that we do here. Some of you may be thinking, okay, I've not done enough with my retirement. Same situation. If that's causing or an element of financial anxiety, that becomes our approach to automating that process to make certain that more money now is being deposited into through payroll. It's set that goes more into increasing my 401 contribution, or 529 contribution. So there's all sorts of ways to do this, but that's where you have to prioritize what you want that savings goal to be. But the money flow budget, if it's set up correctly with a dedicated fund and it's built into that budgeting process, once that's planned out, we know that to be our plan, that becomes part of just setting things in motion, having it pull automatically. We stay within our budget, our funds build through time, and we arrive at a point in time, 3, 6, 9, 12 months at a financial goal. So this would be a very good approach for folks on the call to take your budgeting and your financial goals to the next level. So I talked a little bit about that $50 to $100. Wanted to give you just a quick overview of what I'm talking about. You're going to see a sea of numbers here. I'm going to simplify this for us. In my example, I've got a credit card, in this case, just one credit card, $2,700 of a $5,000 total line of credit. So I'm carrying some debt. I've got about a 28% interest rate, paying $81 a month on this card. If I stay at that minimum payment, it's going to take me 5 years and 7 months to pay off. So as I've said, we work through our budget. We're trying to prioritize things. Debt reduction's an issue for us. I found $50 in my budget. I'm going to add $50 to my monthly minimum payment of that 81. Okay, so that gets us to $131 a month. So by doing that, just adding $50 to that monthly minimum payment, I take what would have been 5 years and 7 months. I've accelerated loan repayment. I'm now down to 2 years and 5 months. That's on $50, okay? You can run the numbers yourself through a number of different debt calculators. I've used calculators.net, but this is a way to quantify or get some real numbers and have a realistic goal. In a couple years, you're planning to be a first-time home buyer, or you need a new car in 2 years, but you're carrying debt. Here's a very clear example of where you can take $50, add it to a monthly minimum payment, and I've got a 2-year goal to get myself, situated with my credit capacity and pay off some bad debts. This is part of my financial plan. This shows how quickly, just through time, that $50 minimum contribution can really change things for you. The second example that I have here is we've got 3 credit cards. A little bigger challenge. So it's almost $8,000 here, $7,950 that we have. I'm not going to be able to change the interest rates just by budgeting. Okay, so both of these examples are not program based. It's just me using cash and trying to accelerate loan repayment. So here it's over 40 months at the current rate. Okay, so if I make the monthly minimum payment of $287, I'm 40 months into this, and a significant amount of interest. I add $100 to this, so my monthly payment now does go up to $387, but if I continue at that rate, I pay this off in 2 years and 3 months. Okay, there's the power of $50 to $100. So that's really what I'm trying to emphasize. When we start thinking about a savings goal or automating the process and building a fund, you can see where this example through automation would take your monthly minimum payment and just make that monthly minimum payment at a higher rate. So we accelerate the loan repayment. That's one approach. We can build that fund. But this right here, consistent monthly payments, increasing that by $50 to $100, you really shave off, you cut that timeline in half. That's a realistic goal. Other examples here as we move forward, when we think about tracking expenses and emergency savings, part of that financial plan that I'll ask you to do is that GE Credit Union also has the money management tool. So tracking your expenses, start today thinking about cash expenses. In addition to your budget, you want to track your cash expenses. You can do this through the money management tool, or you can actually go back and look at your overall transaction history through your bank account. You really want to think about doing this for at least 30 days. That's at minimum, because you really want to think about, if you really want to get savvy, look back about 3 months and start thinking about financial behavior. What are you spending money on? What are you purchasing? And how does it reflect in your priorities? And more importantly, does that $50 to $100 or $200 that I spend monthly, look at what the trade-off is? If I took $200 and added that to my 401k or an IRA or a 529 plan or whatever range of financial goals that are creating anxiety for me at this point, if I were to shift that behavior, where would I be in 2 years? Where would I be in 10 years? So that's the kind of mentality we want to think about, shifting that focus and how we think about managing our finances and that trade-off, giving those items up, thinking about it differently so that we can actually build wealth, or thinking about retirement, or whatever that financial goal may be. But the idea here is, again, tied to our budget, tied to our priorities, we start to increase contributions. We treat this as a predictable monthly expense. And like I said before, the better that we can automate that process through payroll or through transactions at the credit union, that is a surefire way to actually build that wealth or rebuild emergency savings, increase our contributions. That will get us there. So going to challenge you to track, look for those areas where you can save some money, and then reallocate those towards your financial goals. If those things are causing you financial anxiety, things that I've listed here, this is the approach that we want to take. Another issue with financial anxiety is certainly with credit. So if we're thinking about a car loan, if we're thinking about a home loan, well, I work with a lot of first-time home buyers and folks that have a lot of debt. They're just trying to rebuild their overall capacity, raise their credit score, those sorts of things. This is a big part, I think, for many of us who may have gotten overextended through just a bad economy and inflation. If our credit is really causing us anxiety, we think, man, I got to get out of the situation. What am I supposed to do? We have a lot of approaches that we can take to do this, but one thing I'm going to have you do is just think about, what are your overall credit needs? Car loan, home loan, is it a personal line? You're looking at equity lines, whatever it may be. And then that allows us to frame our strategy around those particular goals. So it's important, again, to write down what those priorities are, and then we'll walk our way through the steps that we need to take to get you there. So if you're thinking about being a homeowner and your score is low and you're carrying outstanding debts, well, I can do a lot of work through Trinity to help you along the way. We can rebuild your credit capacity, and then my goal is to send you back to the credit union with a strong score that will help you get the loan that you need. And that would be the same for any number of loans that you may need. So I think this is a really great goal to work on. I think we always need to work and monitor our credit capacity, but just know that we can help you along the way. But it's important for us to kind of start the conversation from step one, which is really identify what it is that we're trying to accomplish. And then if it is a debt issue, well, there's plenty of remedies that I'll show you here soon where we can work through and change that credit score through time. I've included this slide here because when I'm working with folks, time is very valuable. Okay, it is a factor of efficiency, but it's also part of setting a realistic goal for ourselves. Sometimes I'll have folks tell me, well, I'm working on my Vantage score right now and I'm doing a lot with my credit. Well, there are two different approaches. It is a FICO score, but for our purposes, just let me say this. Because time is so valuable, we want to make certain that we start by pulling from the 3 major credit bureaus and using the credit scores that I'll show you here: Equifax, TransUnion, and the FICO Classic. These are scores that will be used for lending purposes. When we think about a Vantage score, while it has education value, it's not a score that's used for lending purposes. So I've included that in our discussion about credit capacity, because if you're relying on a Vantage score right now, you're going to have about a 30-point swing, positive or negative. So just to expedite things from the very beginning, give us a call, work with us in the credit union so we can take a look at the reports and the scores that are listed here, particularly the Beacon score, so that we can really look at your overall credit capacity and try to help improve your credit score. If your credit score is a source of financial anxiety, then we really want to focus on these models as opposed to the Vantage score. Now, if you have any questions about that, please let me know. And then also, we've done a lot through the webinar series to kind of do, hour-long presentations just looking at the scoring model. So briefly, I'm not going to go through all of these, but let's say that your score is right now as a financial, one of the sources for you as financial anxiety is your credit score. Well, your credit score is built around 5 factors: payment history, outstanding debt, credit history, inquiries, and types of credit. So of that score, we can break it down into these factors. So when we think about your plan, top 2 factors are going to be payment history and outstanding debt. So if we've had any of the bad stuff happen, late payments, something went to collections, all sorts of things that can happen here, it's going to fall into this payment history part of your score. We can work our way through that. We're going to rebuild that payment history so that the positive things start to be reported back to your score. This is a very doable and workable way to get ourselves back on track with our credit score. But if your score is negative, one of the factors we're going to look at potentially is just, are we working through our payment history? Do we need to get back on track with this consistent payments? Have we missed payments? We have collection accounts. Where are we at? We're going to evaluate that part of your score. The other thing is outstanding debts. And this is, for most folks, this may be one of the main factors, is just shifting the credit debt ratio. We talk about accounts. I often call it the 30% rule. You'll see that listed here. Our balances should not exceed 30%. So the further out, you take any account, credit card or account that we have, 5,000, 2,000, whatever it may be, times 30%. If we're carrying beyond 30% in debt, as we go further out, our score starts to lower. It increases risk, increases the likelihood of default. So one of our goals, if outstanding debt is causing you financial anxiety, we build a plan around, again, loan acceleration, increasing that $50 to $100 payment on our monthly minimum payments, reducing that debt down from 4 years down to 2 years. We align our budget. We tackle this part of our problem. If this is a factor of anxiety, all things are aligned through budgeting, dollar amounts, and to this goal. And then that becomes part of our timeline. We're no longer working on a 4-year timeline. We've got a goal of 2 years. We've got a specific dollar amount. And if we follow that plan, our outcome is this part of our score is improved, and we go into our next financial goal, which is to get a new car or have a down payment for a home or whatever that goal may be. But for many of us, addressing this is a significant problem. So if you have any questions on that, please let me know. Here's a good example of that. And shows, again, just carrying more debt here below 10%. We're up here at 753. As we carry more debt, we start to accumulate, more risk. That's reflected in our score. Score starts to drop. It's dropped down to 617. So if you're over here on the right-hand side and we need to pay off some of the debt, we're gonna have a strategy that aligns loan acceleration to move us towards this other side where a score goes right back up. I'm not going to go through all of these slides here. I wanted to leave them in the record for you if you come back and revisit this, but lots of questions on, outstanding debts and bankruptcies and those sorts of things. If those are causes or indicators of anxiety for you, really what we're really looking at is around a 7-year time frame for any kind of delinquency to fall off a credit report. And I wanted to include this because if you want to go back and just really do an in-depth review of credit scoring, we have that on the website through the credit union's website, and you'll find, an hour-long presentation just on the scoring side. So if you have any questions on that, I would encourage you to use that as a reference. We do a lot of work there through all of the factors, but particularly on, charge-offs and collections and how those accounts are handled. But beyond that, if any of these issues are a challenge, you can always reach out to me personally at Trinity, and I'll be happy to answer any questions that you have. So again, working our way through this model, inquiries, those sorts of things, what I would encourage you to do here, if you're in the process for loans, we're going to ask that you contact us and just work with us to raise your capacity through the credit union and through Trinity. Applying for items and applying for loans right now without actually having the minimum score to qualify for those loans is just really a waste of time. And we don't want to have a number of hard inquiries that just keep getting rejected. So work with us, the credit union, to pull a score, and let's really align a strategy that raises your score as opposed to having a credit report that's just filled with really senseless inquiries. The next thing that I'll have us focus on, just in looking at our time, is looking at debt itself. So we talked about budgeting. We've kind of worked our way through ways to raise our score and think about credit scoring and reducing our outstanding debts. I've showed you just the power of loan acceleration with a couple, examples around $5,200. We could plug in any number of different numbers there, but I wanted to make certain that you understand the power of consistency and the power of using, $5,200 in a budget to really accelerate loan repayment. Other ways that you might want to deal with debt, a debt management program, which is what we offer through Trinity. The debt management process is reducing interest rates. So that's another approach that you may take where you are basically, in this particular case, you have to close cards to get an interest rate reduction. So debt management can be done through budgeting. So you're handling that entirely on your own. A debt management plan reduces interest rates. It requires you to shut down your credit cards. Or we might want to take a debt management approach where we look at loan consolidation through the credit union. So a credit union consolidation loan is another way to maybe think about taking the interest rates and bringing those interest rates down and paying them off. I'll show you an example of that here in a few moments. But when we think about the debt management side, I also want to share with you some of the credit building products. These are ways that, if you're thinking about debt management and thinking about your score, other sources of financial anxiety, sometimes we have folks that maybe need to rebuild credit or need an additional line to supplement their credit in some way. So we have secure credit cards, a credit builder line of credit, which is a smaller dollar loan, or personal lines of credit. These are very important tools for folks who are rebuilding credit. So let's say you have a hardship and you didn't have a job for a while, and you're kind of, part of your financial anxiety is that your credit score is just really low or credit capacity is low. These are very simple lines of credit that you can obtain through the credit union that have significant impact on building your payment history. So that really can rebuild that number one factor in your score with really lower dollar lines of credit, anywhere between like $3,000 and $1,000, that can really improve the positive part of your score. So if you have questions about these types of loans, and they're small dollar loans, the idea is to improve your payment history and have something positive report. These are a great way to solve that part of your anxiety, and then also address, the second part of that is addressing your outstanding debts. So let's go back to that concept of debt consolidation again. When we think about anxiety with debt, budgeting and our priorities, that's one approach. Credit counseling or debt management. The nice thing about that is the interest rate reduction, although we have to close down the cards to do that. And then another useful method here would be looking at what we can do through a consolidation loan. So here I've got a pretty significant number here, $24,000. My monthly payment is really high, interest rate's high, and it's going to take me a long time, 59 months at that rate. So if your capacity is still strong and you're overextended, A consolidation loan would be able to create a 5-year term, okay, as opposed to 59 months, but a 5-year term at 10% interest. So we got that interest reduction, and then also it's paying that amount off. This allows you to pay this amount off without paying all the extra interest that you're going to accumulate over time through this particular approach. So if you have questions about consolidation loans, I'm going to encourage you to speak with a loan officer at the credit union so we can kind of run the numbers, figure out where you're at, and see if this approach works for you. But carrying $24,000 in debt, that's going to cause a significant amount of anxiety. Just know that there are approaches, debt management approaches, to handle that particular problem. Hopefully that will, knowing something about these approaches can help you move forward. Then lastly, what I'll share with you, just in the interest of our time, debt management strategies, 3 strategies here: utilization, interest rate, and rollover. These would be aligned to your budget, but again, with credit utilization, we're prioritized through the lowest to highest debt amount. What we're trying to do here, utilization, think about it like this: how much of that credit are we using? This is another way to think about it, is shifting the credit debt ratio. So aligning a specific dollar amount, $50, $100, $200, in addition to a monthly minimum payment, to close that window of time. Through debt acceleration, we close, we get below 30% and then pay off. The lower we can get beyond 30% on these cards, the quicker we can accelerate the loan amount through time. That's going to raise our credit score. So utilization approach is just rank ordering and then trying to shift what we call the credit debt ratio, get below 30% on a credit card. Interest rate approach, another approach to do this: highest to lowest interest rate. You're trying to make, timely payments, accelerate the timely payments so that you can reduce down, the highest interest rate card. I've included the calculators here to help us do that work. Use the example that I showed you earlier. You take your minimum payment. We want to add an additional amount to that to really knock out that highest interest rate card, trying to play the interest rate there. So there's some variation on this theme of debt reduction, but the idea is that you want to set a dollar amount, have a priority, and then we want to do this consistently. It has to be done consistently every month to actually do it. That's one of the reasons why I tried to share so strongly about the automated budgeting approach. And then lastly, the rollover plan itself, which is lowest to highest debt amounts. Similar, but here what we're really trying to do is we kind of shave off the outstanding debts around the corners. We're not just focused on one card. We're trying to make an additional monthly payment to get those cards from, being maxed out to maybe all 3 cards now are down to 70%. Then I shave a little bit more. Now all 3 cards are kind of down to 50%, and then I go all in to kind of pay off one card and I roll those funds forward. Sometimes you refer to this as the debt snowball. There's a lot of different ways that folks have tried to describe this, but basically what we're trying to do is shave off those account numbers on the outside and then just kind of move our way towards debt reduction. So we've thrown a lot at you today. Like I said, the goal here is to kind of get you to think broadly, from step 1, just really thinking broadly about where you want to go. You project outward, what type of financial plan do I really want to establish? What are my priorities? Where do I want to go? You can use that budgeting process to kind of set things in motion, create our priorities, create dollar amounts, and then really think about putting that plan together. But you have to create a budget to do that. That's going to set your priorities in motion. If you need any help with that, please contact me. I'd be glad to help you with budgeting. We'll find an approach that works for you and helps you align your priorities so that you can get rid of financial anxiety and start, having your financial plan come into focus. Credit report analysis, we can do that. If credit capacity is your issue, we can certainly do that. If you have questions about, savings accounts, if you have questions about your retirement or insurance needs, whatever those things are. I hope that today what I've done is shown you that there are strategies that you put in place, there are resources, and that there are folks that want to help you through this process. So you don't have to do this all on your own. But please contact us about any kind of loans or services that you need. Take time to kind of work through this process, particularly allowing yourself some time to put together this plan. It doesn't happen overnight, but I've given you some workable strategies to try to help create a framework for this particular approach. And then, as I mentioned, and I'll close here, Kelly, and take any questions that we have. Continue to educate yourself about personal finance. I mean, I'm learning something new every day. I'm certain that folks on the call want to learn more. Please go in and look at some of the resources that are available through the website and all the different financial education seminars that GE Credit Union provides. There are some great resources there. And if you do those things, I'm pretty certain that you will, financial anxiety will lessen, and that you will start to feel so much better and look forward to the future. So at that point, Kelly, let me know if there's any questions. And thank you to everyone for joining us today.
Yes, we do have a couple of questions, so we'll go ahead and open it up for the Q&A portion of today's webinar and the time that we have remaining, depending on how many questions we receive. If you have a question that you would like to be asked, go ahead and submit that in the chat feature, and we will get through as many as we can until we run out. So our first question, Todd, says, how can I create a budget that feels empowering rather than restrictive?
Yeah, it's a great question. That's one of the reasons why I said we have to find that budget that works for you. Okay, so when we think about restrictive, I think the reason it feels restrictive is we have a lack of priorities. So this is where I would encourage you, the better aligned our income towards a financial goal, that's where things become, we don't want it to be restrictive. We want it to motivate us towards an outcome. So you have to be outcome driven. Your thinking has to shift to an outcome. So, what is it in terms of financial anxiety, if that is the issue? We really want to think from the very beginning, to make this budget work, it's got to be tied to an outcome. Otherwise, you put yourself, like, you may be on kind of a zero-sum budget. Every dollar has a destination in some way. It's so restrictive that there's not enough there. If that's the issue, we need to loosen some of those restrictions so you have a little bit more discretionary income so that you can stay on track to meet your financial goals. So there you can kind of loosen a few things to kind of keep you on track if that's the issue. But if it just feels restrictive generally, in most cases, I would say we don't have our priorities in line. We need to really think about what it is that we're trying to accomplish. So if you had to, I would just encourage you to think about, if I had three fundamental priorities, even if I had one thing that I have to do that is the most important, are you really doing that? Are you putting an adequate amount into that goal? But just thinking broadly, the more this can be tied to addressing an outcome, the more this process is outcome driven, the more you start to think about this process differently. Otherwise, it feels incredibly restrictive. You're just kind of going through the motions, and that's no fun. There's no fun in doing that. It's a hard way to go. Align your priorities, think about where you want to be. And once you start to see a goal come into focus, you shift some debt, things start to come down, or you get closer to a financial goal, or you build something like, I want to do some debt repayment, but I also want to create a savings to have the best Christmas we've ever had this year. Something has to be built in there where it's outcome driven, and that becomes motivational. So I'm just going to encourage you to focus on those priorities.
This next question is asking, do you know of any tools or apps that help manage financial stress effectively?
I looked at some of those. There are some, I can't recall them off the top of my head, but if you do a Google search, you're going to find all sorts of different things in terms of, some apps that may be mental health based and some other things. What I will tell you is when we're thinking about managing just overall financial stress, so much of this, again, if we focus on the fundamentals just for a moment, if we really outline some of those underlying causes of financial stress and we align a strategy like I've tried to present to you today, I think those apps are going to be less important to you. Having a clear financial plan and really working our way through a set of numbers and working with others maybe to help you get there, this can become, again, something that feels less restrictive and much more empowering. You start to see some of that motivation and excitement come back into the process. Solving a problem has a tremendous effect on our well-being. It changes the way we view ourselves, the world, and our ability to function through time. So the apps are, in my view, probably secondary to a workable financial plan and working with others to try to help you address the underlying issues of financial anxiety. The challenge there with a certain app is that we start to assume power that app may not provide, whereas a financial plan is very, very outcome driven and much more predictable through time. So please give me a call. If whoever that was, if you want to give me a call, let me try to work my way through. Let me practice what I preach. I'd love to work with you to try to address those underlying issues. And I think it would just have so much more value for you.
It looks like that was our last question, so we'll go ahead and end there. That is going to conclude our Q&A session. If you do think of any questions after leaving today's webinar, Todd's contact information is up on the screen. You can feel free to reach out to him directly to discuss anything you may want to talk through. And of course, you can always email events@gecreditunion.org, and I'm happy to make the introduction over to Todd for you. But with that, that is going to conclude today's webinar. Thank you all so much for joining us and have a great rest of your day.